Your investment plan is your investment plan. The most important is start taking charge of your financial life.
Hi everyone, welcome to this Women's Day special episode of TUI Wallet Talks. Today we have with us Ishita Sen Gupta. She's partner and India leader at Rialto Partners, and she's going to give us some very quick investment tips for women. And she's also going to talk about the common tax rebates available to women and investment avenues. Hi ma'am, welcome to the show.
Thank you, Smriti, for having me here.
Ma'am, my first question to you is that what are the top 3 most common financial planning mistakes that women tend to make?
Let me start by saying that I have seen very often we as a community tend to depend on others to make financial decisions for us.
Right.
So very often women have the men in the family usually. So it could be spouse, father-in-law, son who make investments on our behalf. Now, no doubt that they will do it in their best, our best interest. But as a individual person in whose name the investments are being made, I think we should all be aware of what is happening.
Right.
That is number one. Number two is we also find that very often we make decisions based on sentiments. We follow what others are doing. We must remember that our financial planning has to be specific to our needs. So what may have worked well for a neighbor or a friend or a relative may not necessarily be the best solution for us.
Right.
Each of us individually. The third one is, and this is not just women alone, but generally, in India, I find everybody rushes to make investment decisions in the month of March. Very often it is dictated by tax considerations, but investments are more than just tax. And therefore, we should start the journey earlier in the year.
Okay, ma'am. My second question to you is that while there are no, separate tax slabs for women, are there any common tax rebates that one should be aware of?
So when we talk of tax, Smriti, one thing which has come up more in this year's budget is this whole concept of the old regime and the new regime.
Right.
And many people are still confused about it. So let me start by the old regime. In the old regime, you do have several types of tax deductions and exemptions, and also a certain amount of rebate. Now, and the common ones are generally what we call in the income tax parlance as a Chapter 6A, where investments made in LIC, PPF, Provident Fund, NSCs, all these things are clubbed there, and you get a deduction of 150,000.
Right.
And that is what most of us are used to, and we make those deductions. Apart from that, you do have housing loan interest deductions, which are also available. There is an additional deduction for contributions to NPS, which was introduced a few years back. So these are things which women can still avail of. But it is important now to understand what is happening under the new regime. Because this year in the budget, the Honorable Finance Minister introduced different slabs, income tax slabs, as well as tax rates, and also the rebate. Now, for people earning up to 7 lakhs, you can get by without paying any tax because you have a rebate which is available, which was earlier 5 lakhs under the old regime. Now, but all these amendments have come with a rider that you can only avail if you are falling under the new tax regime. But the new tax regime comes with, there's a flip side to it. A lot of the deductions we spoke about are not available under the new regime. Therefore, it is important because each of us will depend on what kind of investments we have already made. And therefore, it is for us to actually spend some time, understand what the new regime is, which is more beneficial for each individual. Every woman should do this exercise. And in any case, for those who are employed, their employers will soon start asking because this is applicable from the next financial year. So very soon you will be asked to make a choice even by your employer. So we should do that exercise in March.
Okay, but are there any women-specific tax exemptions that are available, any rebates?
Not now, right now, but one is there which has been there for some time in terms of the Sukanya Samriddhi, which is meant for the girl child. Right. So you can get a deduction in terms of the amount that you invest in that scheme for your daughter. And the interest is also tax-free.
And, depending on the stage of life that a woman is, whether she's starting out her career, whether she's in the middle of it, if she's a homemaker, she has a girl child, what are the investment avenues that are available out there?
So investment avenues, Smriti, it will depend on the financial risk appetite also of each individual. I would like to touch upon 2 aspects here. One is the investment avenues themselves, and the other is the approach. because the way, let me first come to the investment avenues. So they are the usual ones where you are talking about, recurring deposits, fixed deposits, uh, PPF. These are, the ones we say LIC. These are all common, and we have been used to doing these for many years, and we can continue doing them. But the returns on from these are usually low. PPF may give a better return, but otherwise, usually the returns are low. So there is the other set of investments which are your market based. So you have mutual funds, you have ETFs. Now, one good way of doing it is also your SIPs, where you can start small scale and you can do that. So it will depend a little bit on the risk appetite I want to take on. Let me dwell also on the approach that we, because that can differ based on which stage in life. Now, I also said that women need to be a little more aware of their own financial situation. So for all the young girls who are just joining the workforce, who are earning their own income, I would say that start the habit of saving a little bit of your hard-earned money. While it is a natural tendency to buy aspirational goods like phones, mobiles, jewelry, or go on holidays, it is a good habit to start early in life to start saving a little bit. And for those categories, SIPs may be a good option for them to start. For people who are a little more advanced and who are homemakers, there is something which we call pin money, where you have your natural household savings, which you might save away a kitty that you normally do. For them, I would say, instead of keeping that as cash in the house or just putting them in a savings account, which hardly any returns from there, maybe start doing a recurring deposit or a fixed deposit from time to time, or even SIPs if you have the appetite to it. As a homemaker, it is also important for me to look at things from an angle of a mother or a daughter-in-law, and make sure that even I think about the senior citizens' needs, whether I can help them to do that. And Sukanya Samriddhi I spoke about, so we can think about that for the daughters. For senior citizens, let me touch upon them also. For them, very often, they don't have much savings. So it is important for the younger people in the family to make sure that even their thing, we take advantage of all the senior citizen savings schemes that the government declares from time to time. They give good returns, and they also give a liquidity in terms of regular inflow of money for them to have their own income.
There is a stereotyping around women wanting to invest and buy gold jewelry, vis-a-vis maybe gold ETFs or digital gold. So what is your investment advice there?
We buy gold for various reasons. Okay, as Indian women, we like to adorn ourselves with gold. Gold, we also like to commemorate special occasions by giving gifts in gold or by buying gold. Right. And we also, from an Indian cultural perspective, gold is supposed to be auspicious. And therefore, this is a very old tradition in our lives, and we cannot wish it away. It won't change overnight. Right. But lifestyles are changing. The way we live is changing. So in the mobile world today, very often we move from city to city. When husbands get transferred or we take on jobs, we move city to city. Having just ornaments or gold coins, a physical form of gold, becomes very inconvenient because you have to keep them in a locker. You can't always keep on moving at your will. So now I think we should also start changing our approach to gold. Right. Government has come out with gold ETFs and sovereign gold bonds, which are issued by the RBI. So each of them has its pros and cons, but the overall thing is that it is definitely much more fungible. You can get a good return, you get the market rate of gold. It's the purest form of gold rate that you get. So we should definitely explore this. If you buy gold for sentimental reasons, buy it only for that purpose. Do not buy it for the investment purpose. Rather explore these options is what I would say.
Finally, what are the top investment tips that you would like to give to women out there?
Your investment plan is your investment plan. So when we look at investing our hard-earned money, whichever way we have got it, therefore we should be specific about our goals as an individual, as a family, in terms of what will work well for us. Right. We should therefore take stock of, what are, and various factors like liquidity, lock-in periods, because whenever we are investing in a product, we have to be very, very aware of what we are doing and what somebody is advising. So look at factors like lock-in period, cash flow, what is the return, what are the risks, etc. The most important is start taking charge of your financial life affairs. So build a regime of first gathering stock. What do you have currently? Okay, how many bank accounts? What are the nature of bank accounts? What other paper investments do I have? What PMAT investments do I have that has been made in my name or the name of my dependents or even senior citizens in the house? Keep a track of it. Every 6 months, go and review it. That will also give you the understanding, and of course tax considerations you will build in when you make decisions, but it will give you a good picture of where you are and where you want to be, so that you don't make hasty decisions in the month of March, but you start that journey early. You see how much cash flow you have, how much you can afford to put in savings, what are your upcoming expenses that you have. You might have a child going in for higher education, you might have, and don't make sentimental decisions. We all love buying real estate. Real estate may not give you the returns they used to give once upon a time. Right. So when you're looking at it, you should take into consideration all of this, apply your mind before you make a decision. Thirdly, I would say, always remember in financial affairs, high returns means also high risk. So if somebody is very, hard selling you a product with a very high return, question what the risks are. You can go in for it, but make a conscious call. Don't get lured by just the high return and end up having your funds locked into something you don't want. Tax consideration should not be the only reason for you to invest in something. As you can see, the government is trying to promote the new regime. New regime means a lot of deductions are going to go away. So you don't want to put your hard-earned money locked into a product where the tax breaks are suddenly taken away from by the government. Right. So tax breaks will add to your final decision making, but that should not be your sole objective of investment planning. And for very complex things, always better to go to a financial planner who will give you some advice, look at the tax angle, then make a decision, and therefore do not wait till March to make decisions.